All right, let's shift gears. Alan Nuckman is standing by, Chief Market Strategist at bullseyeoption.com. Okay, Alan, let's talk about this market this morning. A little bit of COVID fear, a little bit of taper hangover, a little bit of fiscal drag, perhaps. You got a lot to choose from if you want to write a bearish narrative.
I'm still 7/8 glass full.
Wow, 7/8.
The fact is that the market was only down 2% last week, and we were only 2% off the top coming into today. Now, at the same time, we've seen rates fall dramatically. The yield, 10-year yield is down at 1.3%, which is 20% off its recent high. So there's a lot of positives there about what the market hasn't done when potentially this could have been, a big situation. We're still plus 25% for the last year of trade. So,
Alan, if bears can't do it here, then is this like it for them, right? I mean, even as a 7/8 or 6/7, I think 7/8 glass full guy, you can at least admit that the bears have some narrative here, right? I mean, no more fiscal stimulus ahead of us, immediate future. Fed pulling back. COVID, I mean, that's like the big three. If bears can't do it here, should we get ready for like the run-up of our lives?
Well, we've seen the run-up of our lives so
That's
far,
true.
Right? So I'm looking for the momentum to continue. We've got so many positives. And again, after the Fed last week, they're pricing in 3 hikes in 2022, 3 hikes in 23. But guess what? Zero in 24, 25, and 26. So the grand total of all the hikes is going to be 1.75% is where short-term rates are going to be. That's what the markets are telling us. So, I'm not as scared of higher rates at this point, and the market is not either.
Okay. All right. So, Alan, with all this said, however, you're not like trading big caps or juicy growth names today. You are trading VALE and going into the materials category, and you're going to Brazil to do it. What's the matter? No good companies here?
Well,
You got to go to Sao Paulo? Come on, Alan.
Recently, that's had a big boom. We've done BMY. That's had a big rally. I just like the best charts, and this is the best chart setup I could find. I'm seeing money flow, which is very much a positive for a stock that's down on its bottom. It's 40% off its June top, and it's made this great bottom base with bullish divergence. And again, we've talked about this over and over again. It made new lows, but not new highs in volatility. So that's a sign that the short sellers have run out of strength. Now, it's been trading sideways for 3 months between 12 and 16. And it's right here at this $14 midpoint. A breakout of this $4 range targets 20. Now, this stock was at 20 in August. So there's a lot of positives here. And again, last week, when I was doing my research on emerging markets, I told you I didn't have the guts to go after this straight up Brazil ETF. But I was looking at some Brazilian stocks that have really been battered and bruised. And I found this one with a great chart.
Okay, so what's so great about this chart, Alan? Help me see it here. It looks like it's trying to turn around, but you're still pretty well off the highs.
Well, again, I'm a commodities guy by nature. This is a commodity stock, iron ore, and they've got a lot of other, physical commodities, at their disposal here. So it's a good play from risk reward. And the way I'm looking to play it, are you ready for this?
Yes.
January option of 2023.
Whoa.
So it's 400 days of time. I'm buying a $12 call. 12 is a low of this bottom base. The $12 call, and it's trading about $3. So it's about nearly $2 in the money. It's, again, got 400 days of time, and it's only $25 more expensive than the June option. So it's a way to play long buy and hold, and it is a buy and hold. But if this stock does bounce here, and has some short squeeze and some short covering, at $18, this option doubles in value. So it's all about math. A modest move in the stock, it positions for a big gain in this option, and there is plenty of time to do it.
Okay. Hey, Alan, while you're buying materials companies, Cruise lines and airlines are going positive here this morning. And I would think that there's some connection in the realm of like cyclicality and recovery that a cyclical stock like VALE might have in common if you stretch the category big enough. I mean, do you have any preference for like economically dependent businesses, or is this just strictly the VALE chart? That's why you like it.
I think it's more of the chart, but I do like the materials sector that had been a leader in the summer. If you remember that, I'm talking about U.S. Steel, Freeport-McMoRan, Alcoa. All those stocks have pulled back and stalled, and I think they'll rejuvenate as we continue to see recovery. And until proven otherwise, you've got to be able to buy the dips and sell the rips. That's worked.
All right.